Welcome to African Voices, the show about conversations about Web3 technology in Africa. We share perspective and have conversations to understand and appreciate the context of what's happening in the continent, to become informed about what are the issues, and therefore, and therein understand where the opportunities lie, right? And how we can make a difference. Joining me today is the original mobster, uh, Austin DeFi. Welcome. How are you doing?
Hey, Kareem, howdy. Doing good, doing good. Excited to get into the conversation. It's always good to see you here as well and be on the African Voices. So excited for it. Before we get into it,
Great.
though, I was gonna ask you,
Mhm.
are you
Go ahead.
excited for the conversation? What do you got in store for us? What are we looking forward to for today's
I
episode?
think it's going to be a great learning experience because we're going to be talking about policy and regulations, even though that might sound somewhat dull, but I think um, it's groundbreaking stuff. It's innovation. We have on the show S. Alan Kakai, and he's going to be, I'll introduce him in a couple of minutes. But what he's doing is leading an effort to bring in regulation about virtual assets and service providers, right? With the aim of protecting consumers and bringing about innovation uh, in Kenya. So I think we're in for a real treat. Before we get going, again, a shout out to you. Thank you for joining us. Those in the audience, very much appreciate you being here. Thank you very much. Sorry about the delay. We had some technical difficulties with the technology, but hopefully everything will be okay. Um, if you get a chance, please like and subscribe. All right, this helps get the content out to you. And Austin, any comments
I'm gonna
before
double down
we?
on that. Instead of a please, it's make sure to like and subscribe. You're getting phenomenal content on this channel itself, but you also, you have different perspectives from around the world. So in this case, we have the Voices of Africa and Kareem's been hosting this for a few months now. And where else are you going to get so many different perspectives around Web3 education and what's happening around the crypto world? So it's not difficult. Hit the like and then drop some comments. Love to see where everybody's tuning in from, and what some of the comments are would be for the crypto space and just some of the general excitement. But make sure to comment, like, and subscribe. Kareem, so this episode's gonna be all about policy and framework within. Is it Kenya specifically, or is the whole of
Yes.
Africa, or Kenya
So
specifically?
we're going to be, yes, Kenya specifically, but it sort of certainly applies to what's happening on the continent. So yeah. So
Absolutely. Well,
without further ado, Alan, Karibuni, welcome.
hey.
Awesome. Wow, I love the slides and all the
All
flashing
right.
cards before my intro.
Oh,
So
that's Ray of Light. He's in the background doing all of that stuff for us. Thank you.
yeah,
Yeah, thank
so
you. Ray.
um,
Welcome. Can I refer to you as Alan or Kakai? Which do you prefer?
Kakai,
Or
Kakai,
Kakai? All right. So, you're an expert on digital assets, legal policy, compliance related stuff. You're interested in bridging this gap between traditional finance and decentralized finance. You're talking about bringing real world assets onto the blockchain, and you're leading this effort about virtual assets, right? Tell us about your story. How did you get involved? What's your journey, and how did you get to where you are?
so like any typical Dijan, of course, way before I was a policy analyst, way before I was a legal expert in crypto. Can go back to my campus here. So I think around 2017. 2018. So I got into the crypto space, of course, as an enthusiast. Started out exploring opportunities in the Bitcoin space, hunting shit coins and meme coins, and just trying to explore what other opportunities a young African can get out of here, financial and otherwise. So back then, I was still in law school, and so as much as I was doing my legal stuff, I was really keen on the early day for in Kenya those were early crypto days, because I mean in the US we're talking about 2011 2012, but in Kenya those were early days, and things were very technical. So any ordinary person would assume that guys in engineering school or guys who do coding would be the ones who should take lead on that. But yeah, I had to step out of my comfort zone and learn how to. Buying Bitcoin those days was not as easy as going to Binance to buy Bitcoins. It was crazy tough, and so I had to really go out of my comfort zone, just explore that whole world. So of course that passion consistently grew, and I constantly used to attend a lot of meetups, and all this was just meetups around it. So there was nothing much about policy during those days. It was just about trading, node validation for EOS, trying to do Bitcoin mining and all that. Then after law school, I, like any other lawyer, I just went through the normal course of things, but I was really passionate about tech and innovation law. So that led me, first of all, my first year of after law school, I worked for a law firm called Bowman's. It's actually the biggest law firm in Africa, for that matter. Then later on, I moved on to a tech startup called Twiga Foods. That was in 2021, and they had just done a $50 million round led by Goldman Sachs and World Bank. So it was a very exciting startup era for that matter. So a lot of startup hype around that time. So I worked the startup for about a year or so. But all this while I was still doing crypto stuff. Any crypto meetup, I would be there, and anything to do with crypto, I would do so. Then later on, I branched out to, after Twiga, did 2 years in Twiga Foods, then moved on to a law firm, and that is where now policy conversation actually started. So globally, you've noticed even the policy conversions, the real policy conversions around crypto, just started as early as late 2022, mostly Q2 and Q3 and Q4 2023, and a big chunk of it we're gonna hear about it this year. So also that is why my skills came in handy to now do something impactful to the community. Because I think for all these years I was in the shadows. I was like a backbencher, and will just follow projects that people are doing or explore NFTs, explore meme coins, explore shit coins. But now when the rubber hit the road with policy, and some people needed a policy expert, because I was the only few policy guys who were in the room when all these crypto conversions happening, I ended up stepping up. So that was in December 2022, when the Central Bank of Kenya, together with a bunch of other regulators, had met, and they demonstrated interest in regulating crypto. 3 months later, we saw the Kenya Revenue Authority, or rather the Parliament of Kenya, imposing a digital asset tax. So what usually happens when a tax proposal is made, government usually calls upon people or experts or any common person who has something to say about that proposal to stand up and say something. Yeah, so it was a good opportunity for us now to step up. So with the Blockchain Association of Kenya, we did our first ever proposal, and we appeared before the Parliament of Kenya to argue why that digital asset tax was not the right way to go. I mean, it was a tax on the gross value of an asset, as opposed to a tax on the spread or the gains made. And that was the first time ever the blockchain communities in Kenya was deliberately talking about policy and things that directly affect virtual assets. So myself and the co-founder of Blockchain Association of Kenya, Michael Kimani, and Gashora, that was the first step at the door. So after that, we've done a series of workshops and trainings upon trainings and workshops in a bid of educating regulators and educating government agencies on how to approach this industry. So this education, first of all, just educating them the basic fundamentals of blockchain, just making sure that they understand it's beyond crypto. It has a lot of other use cases. Then number two, trying to make them see opportunities for government beyond just tax. And we were like, look, you can tax the hell out of Kenyans, and all these crypto companies will move to other jurisdictions, or you can sit down with us and innovate ways through which the government itself can be a builder. So we really pitched the idea that the government itself can be a builder and own a project that can generate $1 billion plus in revenue into the country. So the government can tokenize the affordable housing project. We have a lot of tokenization of real world assets. That was something I'm very passionate about. Tokenization of real estate. The government can tokenize treasury bonds. The government can tokenize infrastructure. So we were trying to make the government say that blockchain is an opportunity for you to redefine fund revenue streams for the government. Don't look at tax, look at all those other opportunities beyond tax. And all these engagements back and forth led us to 31st October 2023, where they just realized, I think they did a lot of backroom consultations, and they realized we were the best person suited to draft that virtual asset service providers bill. So we managed to convene a bunch of local and foreign exchanges who have extensively supported us, and a few other virtual asset service providers, did more workshops, and came up with the first draft of the virtual asset service providers bill. So this is a high level, this is basically a bill that will just regulate the licensing. So any person who is coming into Kenya and they want to do an exchange, or they want to do an on-ramp, off-ramp wallet, or service provider, or they want to do a custodial wallet, can be able to get a license and proceed with their project. And Karim, thank you very much for attending various brainstorming sessions around that bill. And yes, we'll be submitting the bill to Parliament on 15th of this month. But after the bill, we intend to launch a policy paper project and a few other initiatives, because that is just technically the second foot at the door. The first foot was engaging. Now we have a seat at the table. We are planning out a series of very strategic activities this year around education and around demonstrating use cases. So we want to deliver a pilot use case that can demonstrate to government that they can actually raise funds or tap into the blockchain, not as a tax opportunity, but as an alternative revenue stream that can just make the government successful in one way or another. Yeah. So that is pretty much the background of what we've been doing the past 1 year.
Very, very cool, very fascinating. And I applaud you for your work. So, here we're seeing, civil society actually playing a very important role in bringing about innovation and change in Kenya. And and Ray, if you may, if you can you please bring up that first slide? So for those who have not necessarily been following fintech, here are a couple of headlines from social media and the Star this week, sorry, about the upcoming bill, right? Next slide, please. And I think you had mentioned talking about educating, and you talked about Michael and holding workshops and the like. And I think these were images taken from the Star article about the work that you're doing to inform both society at large and also the government, right? And I think what you're trying to stress there is this notion that not just taxing individuals, but the idea that this technology can actually bring in revenue for the country, right? And I think that's pretty cool. The next slide, Ray, and this slide is from the Emergo paper, talking about how Kenya, Nigeria, South Africa are leading the efforts in this whole digital space, right? And your journey started back in 2017, law school, Bitcoin, um, uh, getting your chops and going through the growing pains of all of that. I think things are far more better, but there's still a need for raising awareness and what have you. So for the benefit of our audience, can you help us understand, you know, uh, what are virtual assets, and how is that different from something like mobile money like M-Pesa, or cryptocurrencies like Bitcoin, or Bored Ape, which is a non-fungible token? So what are virtual assets, and why now?
Yeah. So that's a very good question and goes into the taxonomy and the definition section of our VASP bill. So virtual assets, number one, based in the context of crypto and distributed ledger technology, we are looking at assets that are minted or generated through distributed ledger technology or blockchain technology. Now that would exclude M-Pesa and e-money and all those other kinds of digital assets, sort of, that exist in the conventional traditional finance space. Because for the context of our bill, we wanted to look at things like, so that would mean virtual assets as number one, things that are conventionally known as cryptocurrencies. So we're looking at Bitcoin, ETH. Number two, we are also looking at assets that are conventionally referred to as stablecoins. Those are also an example of virtual assets. Number three, we are looking at real world asset tokens. So, for instance, gold backed tokens that are minted on the blockchain, those can be referred to as virtual assets. Real estate tokens that are minted on the blockchain can be referred to as virtual assets. We're also looking at non fungible tokens, NFTs. Yeah, those are also in the category of virtual assets.
Great. And so we had on the first show, we had Robert talking about tokenization of real world assets and how he was speaking to the notion of creating a special purpose vehicle, um, but which owns a particular like a building, for example, or a property or something real. And then you're able to tokenize that asset, and by holding shares in that special purpose vehicle, you are then making it affordable to then have a layperson have access or ownership of something that might have ordinarily been out of their reach. Can you speak to that a little bit, because you also mentioned you're interested in putting these real world assets onto the blockchain, and why would you put it on a blockchain, for example? Help us understand that.
So there's the SPV model Robert had mentioned. Yeah. So why would somebody put real world assets on a blockchain? Number one is transparency, of course, and number two is liquidity. For me, I feel sometimes tokenizing something is an alternative way of fundraising. So, for instance, if you are an infrastructure project and a bank is not able to finance you, you can get into a negotiation, for instance, with a DAO that is willing to finance you. So the SPV Robert is talking about, of course, in the back end, an SPV will be created or a trust vehicle will be created, whereby the DAO can be able to at least run that transaction in the real world. But what essentially happens is you will get liquidity from DAO members, and DAO members can be able to own those tokens through that SPV that has been created. So what happens is the idea behind this SPV is basically to have frameworks through which somebody can legally enforce can legally enforce a claim, whether it's a bankruptcy claim, a default claim, or otherwise. So that if a bunch of people in the blockchain are giving you money, in the end of the day, those people will need an avenue to redeem their claim in the event you default in the project or in the event something happens. So usually what happens is, for instance, if you are with a DAO, then the DAO will just end up forming a trust or a foundation company that on the ground will have enforcement right. So even in the articles of association or in the memorandum of association of that trust company, when you're registering it, you'll clearly indicate that the directors of this foundation will receive instructions, would only act upon instruction from the token holders. So the idea of this SPV is to represent the interest of either senior or junior token holders or both. So that in the event token holders want to enforce a claim, they will use this SPV to take it to court. They'll use this SPV to get sell orders or some form of orders, so that in the blockchain space, the token holders actually hold token. actually hold the tokens representing the real estate. But in the legal world, the SPV represents their interests. So for instance, if the token holders have given you a mortgage facility of $20 million and they want to call back their capital, or they want to sell this facility to a bank or otherwise, they'll just go to the DAO, and with their tokens, they'll pass a vote. And that vote will instruct the directors of this SPV to act accordingly. So that is how the SPV comes into the picture. Fundamentally speaking, the SPV is the face of the token holders in the legal world. When you're signing contracts and you're doing that, then the tokens will just now represent the interests of token holders at the primary level. Yeah.
Can you please, you made a reference to DAO, which stands for, Decentralized Autonomous Organization. It is a particular creature of Web3. Can you just explain what a DAO is for our audience?
Yeah, so a DAO, the definition is decentralized autonomous organization, but nobody ever understands what that means from first value of it. So basically, a DAO is a bunch of guys who are passionate about a certain set of things coming together and saying, look, let's put our funds together. So me, Karim, and Austin, we can put our funds together and call our other friends to sort of put funds together and have a token representing ownership of those funds. So for instance, for you to redeem, I'll give an example of make a DAO originally. For you to be a DAI holder, you'll go and deposit ETH and mint out DAI. So in the end of the day, DAI was like an over collateralized ETH. So after putting funds together, you become a member of the DAO. Now, when funds pile up to millions of dollars now as members of the DAO, given that we came together with a common interest, we are able to have proposals presented to us, and based on our voting power, we are able to vote on and approve projects. So what this helps is sort of number one, the reason why it's on blockchain is because it now creates all this governance model governed by PSMs and smart contracts. But number two, it enables us as a community to collectively fund projects that we are passionate about. So for instance, if we were passionate about real world assets, we can say the DAO is only taking proposals on real world assets. Now, based on the tokens held by members, members can be able to pass votes on chain on what projects they want to fund. Then, based on the governance criteria set, the governance can be able to release funds to those invested projects. Now, the good thing about some DAOs is that they have governance tokens and investment tokens. So that whereas I'm holding a governance token, so an investment token, I can be able to still generate yield from the projects that we're investing in. So that if I'm a holder of a governance token, I'll come to a DAO and say, hey, let's invest in real estate projects in Africa. The DAO would release and we release funds, invest in real estate projects in Africa. But based on the proposal we saw, there's a way that the DAO, as an investor or a capital investor, will be able to generate revenue. And based on that revenue, I can get some APIs on my investment token. So you'd find some DAOs, not all, have two tokens: governance tokens and investment tokens. Governance tokens are just tokens that will allow you to pass votes on the DAO, to vote on probably committee members, to vote on some projects you want to do, to vote on a few other things. Investment tokens, for instance, DAI is the investment token. You can be able to speculate with it and collateralize it, lend again, borrow against it, and has various other use cases beyond governance. Yeah. So simply put, a DAO is a community of people who come on chain and use blockchain for their governance, and they can be able to propose and support projects in whatever way they want. I've seen a lot of DAOs in Africa that have not even reached that on-chain level. These are essentially some just DAOs run from a WhatsApp or Telegram level DAO, which is fine. But yeah, just to give the context, this is a WhatsApp or a Telegram group or a Discord group with about 50, 100 people who are interested in a mutual project. So most of those DAO levels are usually governance level DAOs, and they have not reached the level where they have investment token. So I can start a DAO and just run it purely on Telegram. I have a bunch of friends who do that. They have not yet gotten to the blockchain level integration, but they can be able to do polls and surveys and vote on various projects that community members want. So that is sort of like a premature DAO, but that is the first level of a DAO, getting a bunch of people together. So the next level for such group of people is just taking all conversations, all approvals, and all proposals on chain, and then they'll have achieved the full force of a DAO. Yeah.
That's an excellent definition. What do you think, Austin?
I love it. I love it. I think there's a comment there. The creature Web3 or DAO is the creature of Web3. Yeah, that one right there. DAO equals creature of Web3. That's funny. But no, I mean DAOs are interesting to see how they come into play. I think they still haven't had like their big moment in the spotlight like DeFi did, NFTs did. I think DAOs still have, they're a little more complex as far as how they'll fit into society. It's not as simple as just launching a token or launching an NFT with some artwork. But there's been some successful ones. We've seen MakerDAO, Lido DAO, Aave Compound, SBU DAO. There's some ones out there. So I love it. There's a couple of things I wanted to touch on throughout it was I love the idea where working with the government and trying to coordinate with them, like telling them, don't trip over the crumbs or the pennies trying to tax every little thing in crypto when there's a much bigger picture here. I think that's where they miss all the time. It's like, yeah, maybe you can make the tax on the capital gains or on the on ramp and off ramp or whatever it may be, but if you just allow for innovation to happen, you'll see exponentially more revenue coming in than what that tax would have brought you in. And so I loved how you're bringing that up with like tokenizing real world assets, tokenizing treasury bonds and equities and futures within the country. So I I don't know where we're headed next, but I'd love to dive deeper into what this bill is that are getting into. And Kareem Crypto Simba, you said you were you also participated and contributed in this bill as well. Well,
Just very briefly, at a cursory level. Actually, I think my ability in writing and will help a little bit more once they get the ideas together. But yeah, I during the past week, Kakai was facilitating discussions, and one of the members who's in the audience, Chantal, was organizing and doing the logistics of getting people on a call and bouncing ideas and discussing various issues from know your customer, anti-money laundering, the role of the CMA, issues around that, what will happen, who should take control of stuff. So there were some excellent discussions well beyond my sort of pay grade, because I don't know too much about some of the legal issues and things around exchanges and what have you. But all of that was happening, and Kakai was leading the effort there. So I think they've collected all of this information. They've got the information, because from what I understand, in the history of this bill, is that the Parliament had asked civil society organizations and the public and the Blockchain Association of Kenya kind of stepped in here to offer some perspectives and offer some guidance on how we might go. And so again, I'd like to turn the conversation over to Kakai to talk about a little bit, to talk about what is this bill specifically, and what it's doing, what does it aim to do, and what's happening in terms of the next steps.
Yeah. So the next steps. So of course, step number one is submitting the bill to Parliament by 15th of this month. That is about a week, 8 days from now. Within the next 8 days, we are submitting the bill. But even before we do that, we are starting a series of further community sessions from this week Friday, 1 hour sessions of Friday, Monday, Tuesday, Wednesday, and just wrap up all the concerns and the feedback we've received, and do a final version of the bill that will be submitted to Parliament for first reading. So from our conversation with members of Parliament, the process of taking a bill from first reading all the way to adoption to law usually takes about 8 months. So within this 8 month window, we have number one, public participation, which is a very important factor in common law lawmaking, or like a common law legislative process. So it's a pretty much standard process across a lot of Commonwealth countries. So what happens is the Parliament will take the bill and move to about, Kenya has 47 counties. So the Parliament of Kenya, together with the association, will set camp in at least 16 to 20 of these counties. So we are looking at accessing a population of about 20 million people through government machinery, just educating them and explaining to them what it's about and getting their feedback. It's pretty much a standard in Commonwealth countries. But the interesting thing about this is, and this goes out to a lot of community partners in the Web3 and blockchain space who are passionate about education. This is a very good opportunity for them to plug in, given that we'll have a good chunk of government machinery and goodwill, and we'll be moving county by county and covering 16 out of 47 counties in Kenya, because some of them will just do them jointly. So number one, as much as we'll be educating consumers about the bill, it'll be a very important opportunity to educate people about the greater Web3 community and the greater blockchain Web3 ecosystem. And as I said, the reason why Parliament bought into this is because we demonstrated to them that government can actually tap into alternative revenue stream beyond the pennies they get from taxes. So if you have an opportunity to do public participation in 16 counties and access over 20 million Kenyans, then we're just going with the same message to them, explaining to Kenyans why with blockchain and DeFi, they can tap into various other opportunities beyond the limited opportunities they interact with from their levels. So while public participation is a standard practice in all Commonwealth legislative process, for us, it's an exciting opportunity to call upon people who are passionate about education and pushing the DeFi narrative further to just join us in that, because it will be an opportunity for us to extensively educate people about use cases. And so if you have an app that you want to demonstrate to society members on how it looks like, if you have a product, a use case that you want to pilot with, it'd be a good opportunity. At the same time, as the bill is going, we're also in talks with the Capital Markets Authority Regulatory Sandbox. And the sandbox is opening up doors to onboard pilot testing crypto projects. So as much as the bill would take 8 months, in a month or two, we'll see more crypto projects being onboarded at the sandbox. As a matter of fact, one has already been successfully onboarded, and we are supporting that initiative. So if anyone also wants to bring in their project in the sandbox while the bill is still in incubation, it will also be a very exciting opportunity. So usually the public participation phase that I've talked about will take about a month or two. And then a few other workshops with key stakeholders and regulators. We are talking the Central Bank of Kenya, a workshop with the Capital Markets Authority, the Financial Reporting Commission, FSC, who are in charge of money laundering, and MLCTF, and key government stakeholders. So all these initiatives are packed within a timeline of eight months. So by Q4 of this year, we are having the President of Kenya, His Excellency Honorable Dr. William Ruto, assenting the bill and passing it to law. So assenting essentially says this bill has satisfied all the necessary steps. We've taken it to first reading, we've taken it to public participation, and we've taken it to stakeholder engagement, and we've now taken it to third reading, and Parliament has approved of it. So when the bill passes it law, we now it's basically implementation. So licenses start being printed out, and projects will now legitimately, to some extent, brag that they have a Kenyan VASP license, so to say.
So let me jump in here. So there are a couple of things that you mentioned, and this is what I heard you say is, so while there's one stream about educating the public in some 16 counties and addressing some 20 million people, there is this, you made a reference to this thing called a sandbox. A sandbox is like a play area, if I can if I can use that term. But the idea is that it's something where we get to test and pilot things to demonstrate the validity, the use case, how it really works, right? It's like a child going into a sandpit and playing and making models and doing things. Can you further elaborate on what you meant by sandbox? I think that will help our audience some.
Okay. So basically, the sandbox was an initial, a regulatory sandbox, even before I get to the CMA sandbox specifically, is a play area that allows guys who have novel innovations, whose that sort of have some sort of compliance ambiguity, for lack of a better term. So you have a product, but you don't understand clearly how that product might end up being regulated. And also, the regulators, on the other hand, potentially do not have a clear understanding of to what extent or regulation or compliance to consuming, but you really want to launch this product and at least try a pilot or test it out to users. So a sandbox allows you to do that. A sandbox allows you to move with your product and operate for some limited period of time within a trial phase of regulatory ambiguity while you're figuring out what licenses you need, what laws you need to comply with. So we've seen a lot of capital markets authority, equivalent of the Kenyan capital markets authorities, setting up sandboxes. But for a long time, even for the Kenyan sandbox, some of these were just fintech crowdfunding products, and they had never yet onboarded a crypto project. So they have onboarded other crowdfunding products, they have onboarded lending apps and all that. Successfully completed 12-month sandbox period. Some of these onboarded projects ended up being well funded, and they've done a couple of well funded rounds and are doing quite well in their industries just because they went that sandbox test out. So if you're, for instance, a crypto project, given that crypto and Web3 and virtual assets are still operating in that area of regulatory ambiguity, that sandbox will be able to sort of incubate your project compliance wise. So they just offer guidance compliance wise and necessary introductions and necessary trainings for them to understand your product better so that they can advise on what you need to comply with, but also for you to understand the gravity of the compliance requirements you need. So it's a good opportunity that this sandbox opportunity is opening up while the VASP bill is being developed, because a lot of the insights and the outputs that will come from those sandbox will end up informing other subsidiary legislations, other guidelines, and other risk reports and other things that crypto projects usually come with. So it's very important to run both concurrently, because you understand that an act of parliament simply provides an umbrella omnibus legislation. But down the line, we'll have to create guidelines on stablecoins. How should stablecoins be treated? Guidelines on digital asset tokenization. And we can only manage to get there if we have onboarded some projects through the sandbox. They hit some walls, we brainstorm on those walls, we unlock those opportunities, and then based on those insights that we brainstormed on, we come up with guidelines that will better shape other people that come after them. So, yeah.
Very cool. Austin, thoughts, comments?
I loved listening to the part of how how the bill came to be, as well as how it's going to go through the process of passing through the public opinion into the parliament um, with the president itself. I can't remember the word he used, but approving it essentially. So yeah, no, it's interesting to learn. And then from the sandbox perspective, I love that the country is open to experimenting. Sandbox itself is like a playground, and so it's like, um, just opening up to like what do they really have to lose by embracing tokenized future, tokenized technology, and getting involved with it, seeing how it can grow, and what a better way than doing it within the country by having a sandbox to do so. So absolutely love it, and it looks like y'all are getting the country and getting the leaders of the country educated and getting them in position for success for the next generation of innovation. So Kenya's having a phenomenal, as far as I can tell, the last decade, it's had incredible growth, and curious to see where that's going to continue going with the future of Web3.
Yeah, I think it's fascinating to see what's happening, how we're moving the technology forward. It's folks like Kakai and Robert and Michael and Paul and the folks at the Blockchain Association of Kenya who are sort of leading this effort, and maybe other countries around the world can learn from this experience, or even participate for that matter. Uh, Kakai, again, I wanted to ask you. You talk about the VASP, the virtual assets, and it's related to service providers, the SP. Can help us understand who or what is a service provider, and who gets involved, right? Can you tell us a little bit about that?
So, a vast virtual asset service provider within the context of the bill and within the context of a lot of definitions that have been used globally is somebody who basically, for lack of better words, provides services within the virtual asset space. And as we are defining virtual assets, now let me break it down. So either number one, usually an exchange. So an exchange is basically a platform, mostly a centralized platform, but of course you have decentralized exchange that allows you to come buy and trade, buy virtual assets, swap virtual assets for other assets, um, sell your virtual assets. So essentially, an example of an exchange will be your Coinbase, Binance, Kraken, Jupiter. So all these are exchanges that will allow people to either buy, sell, trade cryptocurrencies and other virtual assets. Number two, another example of a virtual asset service provider that we have defined in the bill and of course has been defined in several other pieces of legislation is a custodial wallet providers. Because we understand there are two types of wallet in the crypto space, or there are two primary, but of course you have secondary wallets like NPCs and multi-sigs, but there are two primary wallets, custodial wallets and self-custodial or non-custodial wallets. So custodial wallet providers are people who actually are in custody of your virtual assets. So they use the servers or whatever, they actually hold your Bitcoin. So given that they are holding your deposits and managing that risk for you and managing the deposits for you, for the purpose of the act, we had to classify them as virtual asset service providers because of the risk of insolvency and the risk of them disappearing with your virtual assets as a consumer. So there, I want to also say we deliberately omitted non-custodial service providers. And I was giving somebody an example of non-custodial or self-custody. Is like the difference between a custodial wallet and self-custody is like custodial is like a bank where you deposit your money, actually, and self-custody is like putting your money under a mattress or in a safe deposit box that you manage directly. So you actually have a safe deposit box in a bank that you go and open yourself and manage it directly. Whereas custodial, you're just confident that you have a deposit somewhere in a bank. You can't see the exact safe. You can't see the exact safe number, but you're just confident the bank manages something. So for lack of a better example, I always use those two. So that is number two. Then another example of a virtual asset provider, or rather somebody, a group that we've listed out exclusively, is guys who do on-ramp, off-ramp. On-ramp, off-ramp means if you have Kenya shilling, you have a Kenya shilling note and you want to convert that note into Bitcoin, or you want to buy that, you want to use that note to buy USDT or USDC. On-ramp means the process of converting that fiat currency into a virtual asset. So we have a bunch of guys who provide such services. People like Kotani Pay and the likes, who will get your Kenya shillings and give you USDT or USDC in return, and vice versa as well. They can give you USDC for them to get Kenya shillings. So on-ramp, off-ramp means the process of moving from fiat to virtual assets, or from virtual assets back to fiat. So those are also Class C licenses, and there's a license category for them. And the example of virtual asset service providers, in the context, people who offer, to some extent, token issuers. So, for instance, somebody who is in the business of issuing, advertising, and soliciting for purchase of tokens, basically. So you've done a real world asset project, you've tokenized it, and now you want to issue those tokens to the public. So we classified them under VASPs, but the conversation around token issuers is something we want to dig down further. But for this context, it will just allow somebody who is issuing some certain tokens to the public and soliciting the public to purchase these tokens to have a license. Other jurisdictions go to the extent of classifying advisory services like audit and the insurance and all that with regard to virtual assets as virtual asset service providers as well. But primarily, the top three virtual asset providers are on-ramp, off-ramp, wallets, and exchanges.
Right. Thanks very much for that clarification. Actually, so the point that the phrase or that comes to mind when we talk about custodial, non-custodial wallets is, not your keys, not your crypto. So we've seen what's happened with FTX and other projects, other centralized exchanges, right? The idea, as you mentioned, it's like the custodial wallet is like the bank, and when I put money into the bank, that money is not mine. Actually, it's a promissory note from the bank to me, saying that they owe me that money. It goes as on as liability in their books. And if they go under, then I could lose my money. And we've had situations in Kenya where that has happened. But certainly, it's very interesting to understand that what counts as a service provider. And we had Michael talking to us from Katani Pay, our last episode, about on and off ramps. And for the benefit of our audience, those who don't know, USDT and USDC are known as our stable coins. So these are tokens that maintain their value at $1 US. They're not like ETH and Bitcoin and what have you where there's a lot of speculation and are rather volatile. So they're unlike those cryptocurrencies. These are stable coins are maintain their value stable at $1. Austin, any thoughts, comments? We're getting close to the end.
Amazing information, great information and insight on the inner workings of the bill, and also just great explanations of custodial wallets, centralized exchanges, the VASP, VASP. Um, I guess a question that I would have is a little bit separate, or unrelated to the bill, more so for Kakai, is like, what is your overall purpose or reason for being in Web3? What is it that keeps you going? What gets your blood boiling? What wakes you up in the morning to be fired up to continue building in this and continue striving for a better future? I mean, what's your reason? What's your why? What's your purpose for being in Web3?
That's a good question. My purpose has been shifting over time. Originally, my original purpose, like all other Bitcoin maxis, was to fight the centralized system. Was and we are tired with the conventional banks, with the insurance companies, and all these guys who were just out here to settle. So my original purpose was just to break away from this centralized system. The reason for that was because maybe Satoshi's first white paper was the first thing that was introduced to me in blockchain, and decentralization was the only gospel I knew at that time. But over time, the more I interacted with beyond Bitcoin, so after I shifted beyond Bitcoin, so I can say I'm a former Bitcoin Marxist, and so the bigger picture. So beyond Bitcoin, you'd see how blockchain can build out opportunities for people and really deliver value to the people that matter. Speaking as an African, where we have a lot of failed systems, a lot of them fail because of lack of transparency and accountability and auditability of all these projects. Blockchain for me solves a lot of those issues. So my number one call for blockchain is building a system where everything works perfectly because everything is audited and transparent on chain. Then number two, this will now lead up to opportunities of financial inclusion. I'm personally very passionate about financial inclusion, and this would mean lowering the barriers of entry into the finance world. And as Karim gave an example of tokenization, so for instance, in Kenya, if you wanted to purchase real estate, you need to have, for instance, a minimum of $10,000 or $15,000 for an apartment for you to purchase a business space on a mall as an investment. You need to have an entry of $200,000. So that would mean any person earning about at less than $1,000 a month will not be able to tap into such investments. But look, we have an example of real world asset tokenization, whereby a whole floor space in a mall can be tokenized. And you can come and tell Kakai, look, Kakai, with your $500, $1,000, you can own 1 meter, a 1 meter square of this mall. You can own a fraction of this mall. So for me, I'm also passionate about lowering the barriers to entry into financial and investment opportunities. So we have guys who do RWA tokenization and also guys who tokenize some commodities, stocks, and investments, so that we have a world that is transparent, systems are working, and a world where anybody with as low as $1 can tap into a financial opportunity and earn their yield, no matter how small, they're included in the ecosystem. So that's my call.
Brilliant. Awesome. Austin, thoughts? Any follow-up questions? Comments?
I love it. Let's go. Let's go. This decentralization. Let's take over. Let's keep on building, keep on growing. I love it. It's bringing opportunity to people that before didn't have opportunity. And so, um, money in the last couple of centuries has been used as a controlling tool for from the top down. And so finally with this, we have an ability to separate the state and money between. And so we don't hopefully we get out of this corrupted opportunities for some of these people. But get rid of corruption, get rid of fraud, get rid of or at least minimize it. Blockchain is not going to completely eliminate it, but at least it offers opportunity for more transparency and minimalizing it. But then also just opportunity, like you're saying, being able to own a meter part of a floor space in a mall. And now, like the beautiful part about it as well is like right now, just even around me, there's a mall like a mile and a half away from me. I have no vested interest in making that mall successful. Like I don't care if it's good or not. Like, but if I go to it, I want it to be nice. I want it to be clean. I want it to have the latest greatest products. But as far as like it being successful, like I have no interest in it. But if I owned like even a square meter in that mall, I'm gonna be telling everybody the best mall in town is this mall over here. Make sure you go to that mall. Make sure we get these products. So like what it does is like it makes the local people have more of a vested interest in the local economy and local communities. And so I think that'll also enhance quality of life and enhance more business and commerce in the localized area, while also tapping into global equity. If I can collateralize my square foot or square meter in the mall and take a loan on it in Aave, so I can have some ETH to go and degen around, like that is just incredible, tapping into global liquidity. So I'm all for it. I'm excited. I'm fired up. But thanks for sharing that, Kakai.
Yeah, I think I was just reflecting on this. I was talking to CryptoWitch just this morning. I think, what's different from this time a couple of years ago with DeFi summer, right? Is that the technology has taken on a whole new level of sophistication, right? And now we've got the combination of AI, we've got mobile technology, we've got social finance, it's going to be able to put people within access. And as Kakai was talking about, DAOs, you and I are familiar with that. They have treasuries, they have on-chain uh, voting and proposals and what have you. And so it makes it possible for, let's say, Africans in the diaspora to be able to facilitate the transfer of funds to family and at home in Kenya, right? So, and then you have folks like the Afropolitan talking about wanting to create an internet state for that matter. So a lot of fascinating ideas coming around, zero knowledge proofs, you name it, DePIN. I think we're in for a fascinating ride. Kakai, I want to go back to you. If members of the audience want to participate and help get involved, what should they do? How do they get involved? How do we make it easy for them to participate and make a difference?
Awesome. So number one, I think you can join our community. Our community manager Chantal is here. She'll just drop the link to our WhatsApp group, and where we always have a lot of exciting conversations. Because I know from this week Friday it will be a sprint of another round two of more community engagement sessions. So this week Friday, next week Monday, Wednesday, and Thursday, we'll be talking about various issues still around the bill. We're looking at comparative analysis, looking at what Singapore is doing, what Japan is doing, and what Kenya can borrow from those global best practices. We'll also be looking at a regulatory impact assessment, how this bill communicates to other acts or other laws that exist in the traditional financial space. How can we make this bill connect with the banking industry? Because for me, I'm passionate about bridging TradFi and DeFi. So can this bill be the bridge that will actually make that happen? That a banker can actually see a channel of moving from banking industry to DeFi through this bill. So we'll have a whole session around that, bridging TradFi and DeFi through this bill. Then we'll also have a further session on policy analysis. So that is in as far as people who want to contribute to our sessions this week. The bill is also still live. So if you have experts in this space who want to contribute the intellectual resources and take time to discuss either one-on-one with me about the bill or just join our community calls and support us, that is also another way of supporting us. Any other activities for Q2, Q3, and Q4 this year will also be communicated in the group after we submit the bill, because we're also mooting around what are the next steps, and I indicated a few workshops, consumer protection initiatives, education, and a few other things. So if you have guys in this call who are passionate about education, they can also reach out to us and collaboration for our workshops, either virtually or physically. If you have guys who are passionate about building and demonstrating use cases, our founder Michael Kimani is the director for innovation, is also running a pilot project, so they can also reach out, because we need to demonstrate use cases. And any initiative that, or anybody in this space that is just passionate about collaboration in as far as advancing the DeFi Web3 blockchain agenda is concerned, can all reach out to us, and we can brainstorm on areas of synergy. Yeah, thank you.
Right, and it goes without saying, you don't necessarily have to be a developer or techie per se. I mean, all people are welcome.
Yeah.
We're at the top of the hour. Ray, were there any questions that came in that we need to be aware of?
No, I don't see any questions. It was excellent though, you know.
Yeah. All right. Wonderful.
But I say,
Austin,
like, I love the story.
Yeah.
Your story, Kakai. I mean, it's amazing. It's excellent. What I'm starting to understand with anybody in this space, that the journey is the alpha, and it's an important thing that's going on. Like, hearing you from the beginning is that you got into Bitcoin and all the action and the fun at the beginning, and then now here, look at you, right, about to make bills passed in Kenya and changing your world, right? We say this to our community all the time. We're going to change the world, and this is the goal. And your story, just from then to now, it's amazing, and I really appreciate it. It's inspiring. So thank you. Is an awesome session here. Thank you.
Austin, any final words?
No, nothing other than just appreciate y'all. Appreciate you, Ray, for holding down the fort in the production. Simba, as always, phenomenal host and facilitating the conversation. And Kakai, phenomenal guest. Great to have you on. Great to become friends in this Web3 world. We definitely gotta follow each other on Twitter and stay connected because I want to follow along your journey as well as anything that we can do to help you, assist you. We got a huge men force. We got a lot of power behind us. And like Ray said, we talk about changing the world all the time, and we're actively doing that. So finding allies in the world to do that is phenomenal. So look at you as an ally and a friend in this Web3 world. So we got to further connect. And shout out to your people joining us and everybody else, that all the commenters and the people viewing and people that watch the replay. Phenomenal. Thank you. And let's keep on changing the world. Keep on impacting it.
All right. There's an expression in Kiswahili called karibuni tena, which means, welcome back again. We hope to see you, tutaonana. So hopefully, once once we get through the next phase, we'll have you back, and we just continue having this conversation and seeing how we can support you. Austin is a mobster. He goes around and jumping into spaces and providing support. We just want to create some energy in Web3 and support people who are making things happen. So don't hesitate to call on us and see how we can support and help you in this effort. Okay, Kai, any last words before we say goodbye?
Yeah, I'm very excited for future collaborations, man. We have a lot of projects in the pipeline for DeFi enthusiasts, and yeah, I think I don't know if you can get WhatsApp to Austin and Ray or how we coordinate, but
Awesome.
yeah. So yeah, just looking
All
forward
right.
to. And I know, Karim, you indicated that you're coming to Nairobi. Is it next week or the other week?
No, I'm in Nairobi. Yeah, I'm in Nairobi now. Yeah.
Awesome. So you're attending that.
Hopefully we can connect. Yeah, and so yes, I'm looking forward. I'm in Nairobi for the next week, so hopefully we can sort of connect. What was I going to say? Thank you again to the folks in the audience for participating. Again, like, share, subscribe. Please follow us. Let other people know if you think they might be interested in this content. And then in a couple of weeks, we'll have Bradley talking about this intersection of IoT, blockchain, and artificial intelligence. So that should be a great one. So a lot of innovation happening in Kenya. You're a great example. Hats off to you for the work that you're doing. All right, and Mungu Saidia, God be with you. Bless you.